I'm Tom Deluca, CEO of AMP Credit Technologies. Just launched today in the UK our platform for banks to provide small business loans to their customers.
I'm Rhydian Lewis. I'm founder and CEO of RateSetter, which is a peer-to-peer lender focused on consumer and business loans.
I'm Giles Andrews. I'm one of the founders and the CEO of Zopa, which is a peer-to-peer lender, peer-to-peer consumer lender.
And I'm Louise Beaumont. I'm Head of Public Affairs and Marketing for GLI Finance. GLI Finance invests in the companies that provide SME finance. We have 17 investee companies on 3 continents, delivering 8 different types of SME finance.
Fantastic. Well, thank you very much to you all for joining us. Rhydian, you were quoted as saying this year is going to be the year of modern finance, in fact. Can you explain a little bit about what you mean by that, and maybe everyone can chip in their own views?
Sure. Well, I think that at a certain stage industries get to a size where they lose the moniker of alternative, and they kind of become just, perhaps people look at it and reappraise it and think is this just a modern way of doing things? And I think we are particularly keen to position what we do as just a modern way of doing things as opposed to necessarily alternative, because I think that narrative alternative suits the incumbents. And I think that our industry is doing something just using technology in a modern way.
No one describes the bond market as an alternative finance, do they? It's become the established way for large companies to borrow money.
You stole my next question. What's the appetite then for a modern world of finance?
I'd say that when we talk to, the demographic of our customer goes from about 21 through to, I think there's somebody who's 89 actually. For those people who are used to banks as they are, it does seem very alternative, this, and we don't pretend that it will take a long time to change that view. It might, and it's not something we worry about too much. But for the younger generation who are more used to sort of different ways of doing things, or sort of social trends such as the sort of sharing economy, I think peer-to-peer lending actually seems quite intuitive to them. It doesn't strike them as that odd. Mm-hmm. And so as that generation of 20-year-olds kind of goes into 30s and 40s, I think they'll see this as quite normal.
I mean, the appetite typically of consumers for new products and services that offer better value, and in many cases offer better service as well, is huge. Mm-hmm. And it's a function of how long it takes to build awareness in what we do. So trust comes first, mm-hmm. and then awareness, and with awareness comes greater trust. And these things don't happen overnight. We've been in business for 10 years. These things don't happen immediately, but we're all in enormous period of momentum at the moment, at a time when the alternative, what we're calling the alternative, like the traditional sector, is still in retreat. Mm-hmm.
Yeah, by whatever moniker you put on it, what we're looking at is there have been significant areas of addressable market, either on the consumer side, on the small business side, where technologies that are now currently becoming much more accepted are allowing us to apply those products into those segments. So huge opportunities across a variety of areas. And I think this is the year, 2015 is definitely the year where people recognize that you don't have to explain to people what you're doing anymore, and there's a great receptiveness to it.
And talking of receptiveness, Louise, people have been tweeting about what you've been saying about banks shouldn't be fearful of fintech. Could you explain a little bit about what you mean?
I think that one of the things we were sort of skipping around saying here is you don't have to be a bank to provide a financial service. And if the banks are just defining themselves by their banking license, they're missing a huge trick. And actually there is real credit and real opportunity for them to become much more involved in this sector, because they could start to see it as an opportunity, not a threat. We're not taking business they don't want to do. We're doing business in a more efficient, more effective, smarter, faster, fairer, more transparent way. They can still get involved. They can still help invest in the loans which are being originated by these platforms. They can invest in the platforms themselves on an equity basis, or buy shares. It's not a question of us and them. It's a little more nuanced than that, because it's been going on for a while. And when you now meet people in the banks, they're very curious about what we do, they're very curious about how we do it, and they're quite, in some respects, quite envious of the technology that we have, because we've got, I think Rhydian called it clean technology, we've got fresh technology, new technology, which has been written recently, and it can and it does do exactly what our session was discussing, democratizing finance. It's bringing people who have money together with people who need money, and getting those people to interact in a way which is utterly transparent and fair.
And what's been the reaction from your colleagues at Innovate Finance today? Have you had a good reaction to your particular line of the industry?
I think the entire event has been an indication of I think what we've described, and as Rhydian just described, that 2015 is the year. Whatever the product or the market we're trying to address, there are 700 or more people outside who clearly get what we're about, get what we're trying to achieve, and are hugely supportive of our efforts to get there. So I think Innovate Finance has been the perfect platform to do this.
And getting this number of people together in a venue like this would have been unthinkable even 2 years ago. The world has moved a long way, and there's considerable appetite both within our narrow ecosystem of people who are sort of cheerleaders, if you like, of what we do, but that enthusiasm is going out into the wider world as well.
You can always tell when something is really taking off, when it's no longer just the zealots, when it's people with a very established business model. So if you think about the legislation which is coming in to mandate banks to refer to non-banks, the businesses which are really interested in this legislation, of course the banks are really interested. The 10 designated banks are very interested. Of course the neutral platforms are very interested. But actually it's the people who develop turnkey compliance solutions, whether that's EY or PwC or KPMG. These are big established firms with depth of consulting and accountants and tax experience who can see the opportunity, and it is their interest in this space, which they've been demonstrating for a number of years by research into this space. They're now thinking about how they can get more directly involved and leverage their skills into this space. So it really is spreading not just in our industry and not just in the financial services industry, but the ancillary industries as well. And I think that's when you know something is bedding in.
And how fantastic that that's happening in London. How do we keep that innovation here? How do we maintain that global leadership position? Is it important?
Well, both Giles and I sit on the Blackett Review into Fintech, which was commissioned by the Chancellor in Q4 last year, and we've been working on it jolly hard ever since. And one of the key challenges that he sees is an opportunity for the UK to retain leadership in this space. It isn't a question of keeping all of the innovation and all of the ideas here. It is a question of reaching out into other parts of the world, whether it is Australia, whether it's Singapore, whether it's Hong Kong, whether it's New York, whether it's San Francisco, whether it's Chicago, wherever it is, to make sure that the innovators know that this is a place they can come, this is where they can share their ideas, this is where they can get heard, and crucially, this is where they can get investment. So it's not about locking it down, it's about paradoxically opening it up.
I think what Innovate Finance and the government as well has done is really harness the energy that's just very natural to the UK market for entrepreneurial endeavors. We've been operating in Asia, Hong Kong, Philippines, Singapore for 6 years. And we came to this market for a number of reasons, but it's really becoming the home of the future of the company. First of all, a much bigger addressable market. Hong Kong, Philippines, Singapore, the three countries I mentioned, in terms of numbers of SMEs that could be loaned to, actually the UK has far more. One market, one regulatory system. I think the regulatory system is an easy one in which to work. Also, management staff capabilities here. That was something that we've discovered is remarkable. So we're starting to look at various university recruiting programs and such, building up our R&D capabilities here. And of course, as Louise mentioned, access to the capital markets. It's critical. So I think it was a rather unique circumstances for the UK. I don't foresee it being dissipated anytime soon. If anything, just getting stronger and stronger.
And the very fact that the government are keen to help however they can. In our industry, they've done a number of things in the last 3 or 4 years that have been terribly helpful. Just shows that they're open for business.
Fantastic. Lovely. Thank you very much, all of you, and enjoy the rest of your day.
Thank you.
Thank you.
Thank you.